Joining us right now is Stephanie Link. She is Hightower Chief Investment Strategist, also a CNBC contributor. And Steph, this is pretty interesting to watch this big gains this morning, a lot of it being attributed to the idea that the tariffs will be more targeted than had been initially anticipated. But maybe we're just back in the waves of trying to figure out what this is all going to mean over the next 7 days or 9 days or so.
Yeah, I mean, I think we're not out of the woods just yet, Becky. I think we are going to continue to see volatility. But I think the bigger question or the bigger issue at hand is how much is the economy, how much is the U.S. economy slowing? I do not think that we are headed into a recession. I do not think we are in a recession. Even though we're getting negative readings from the Atlanta Fed tracker GDP now, I think there's a lot of noise out there, and I think you're growing at about 1.5% to 2%. And last week, even though we've seen really softness in consumer sentiment data and confidence, which is understandable, just given that we don't know a lot in terms of the tariffs, but other data last week came in actually pretty good. If you look at existing home sales, they were up 4.2% month over month. You look at housing starts up 11% month over month. You look at industrial production beat, initial claims still low. And I know retail sales were soft month over month. However, they're still up 3.1% year over year. So I kind of just step back and say, OK, if in fact we're growing 1.5% to 2%, what does the earnings picture look like and guidance? And I expect earnings to be up about 9–10% this year. And some stocks are down so much in the last couple of weeks or even year to date that I've been picking away. I 4 weeks ago had 9% cash in my portfolio. Today I have 3%. So I'm just trying to buy quality on sale. Yeah. It's not easy to do, by the way, because every day they keep going down.
Right. You've put a lot of money to work. And I think your thesis for a while has been that you're avoiding the highest of the high flyers, the Mag 7 stocks, the big tech stocks. You're looking at the real economy in other places.
Yeah, and that's exactly why I mentioned earnings. Like, what do I think earnings can come in at? And it's actually much broader and much better in other sectors. Mag 7, by the way, the numbers have actually been coming down. So when I look at where numbers are going higher, okay, consumer discretionary, Target, Amazon, financials, Wells Fargo, Bank of America, anything tied to the power grid theme, Quanta Services, Eaton, Nextera is a new position for me, and energy, SLB is a top 5 position for me.
You put 2/3 of your cash to work in the last 2 weeks. That makes you think that maybe a 10% pullback is all we're going to see here? Is that what you're kind of anticipating?
I think so. And then some of these other names that I just mentioned are down a lot more than just 10%. So I was just trying to find the ones that got super beaten down and where I think you could see positive revisions higher.
You still like Boeing, too. That's been a name you've liked for a while, but you put more cash there in the last week.
Yeah, it is a really large position right now. It is my pick for the year. The stock is down in the last year and a half, 36%. Very low expectations. Not a lot of people are talking about it positively, but I do like the new CEO quite a bit. The execution is improving. Supply chains are improving. And by the way, that's also positive for GE. They also said supply chains were actually getting better. But the most important thing for Boeing is execution on the 737 and the 787. And production levels are going higher. And that's important because that will have positive implications once they deliver these things, that their free cash flow can be better. And in fact, last week at a conference, they did talk about in the second half of this year, free cash flow being better. And that's what this stock trades on, free cash flow. And oh, by the way, one last thing, maintenance and repair. The company's talking about repairing and maintaining their businesses, their planes, because the planes are so old and there's not enough of them out there. The company is saying that this cycle is, and we have another 3 years of tailwinds in that particular part of their business as well, which of course has higher margins. So I think there's a lot of good things that are setting this up well for this year.